Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld.
And I'm Isabel Lee. Welcome to Bloomberg Crypto. Here's what we have today. So Bitcoin facing more headwinds since the worst drop since the FTX collapse in 2022.
Plus, we talk about the final stages of the Securitize SPAC with CEO Carlos Domingo.
And Kraken CEO Arjun Sethi discusses their approach to the SpaceX IPO and their work with the FIFA World Cup.
That's all ahead, but let's take stock of where we stand in the market right now, because Bitcoin, as we mentioned, fresh off its worst week since the FTX crash back in 2022 as market sentiment and technical indicators all weekend. Now, some analysts here see further downside after dropping more than 50% since last year's record high. And Isabel, it's going to be really interesting to see if we fall back below $60,000 per coin.
Definitely a threshold we're looking at. We're also looking at strategy, Katie. Michael Saylor's company bought 1,500 Bitcoin last week. So this comes after the company sold 32 Bitcoin in May. This is the first sale since 2022. So sure, the amount itself isn't noteworthy, but it's a symbolism that shook investor confidence, especially because Michael Saylor for years has been saying he will never sell Bitcoin. So this sent the coin plunging.
Well, let's discuss these market moves with Bloomberg's Emily Nicole, who covers crypto at large for us. And Emily, it's interesting. I mean, you think about the different cross currents right now, all hitting the crypto market. What are analysts, what are investors saying about what the path, what the charts look like in the near term ahead?
It's definitely proving to be a tricky one to predict, not just because of what we've been seeing in the past. You know, the impact of the Iran war has been significant on Bitcoin over the last few months, as it has for a lot of assets, but also what's coming up. Interest rate hikes are making things rather uncertain. Jobs data last week made things kind of uncertain as well. So what we're really seeing is a real mishmash of things hitting Bitcoin at the moment in a time when it itself is still pretty fragile and can't take that much more of a beating, it really feels like. So as you said, it sank below that key threshold of 60,000 on Friday, and we're starting to see it slightly recover somewhat now, but to be honest, it's struggling to stay above it.
Talk to us about the significance of Michael Saylor divesting some of their crypto holdings. I mean, again, the number isn't that significant. It's negligible, actually, but it's really the whole a sentiment that spooked a lot of investors, Emily.
Yeah, I mean, Michael Saylor is best known for espousing things like, you know, sell a kidney before you sell any Bitcoin. I'll never sell any Bitcoin. Bitcoin's worth more to me than anything else. That's the kind of stuff you really hear him say quite often. And so when MicroStrategy moved to sell some of his Bitcoin, that really did unnerve people. And to Strategy's credit, it did warn people that that could be the case. The digital asset treasury model has not been doing amazingly over the last year, particularly with Bitcoin itself sinking so low. And so we did not expect this to be on the cards. But that said, you know, it's the first sale they've made since 2022. It's the second they've ever made. That is definitely not a good sign if you're thinking about where Bitcoin's headed.
Yeah, another interesting size and scope dating back to 2022. And speaking of what happened in 2022, the collapse of FTX, let's talk a little bit about Sam Bankman-Fried applying for a pardon. And Emily, I guess if you had been following his social media presence, this isn't that surprising necessarily.
No, he's definitely been angling for a pardon for some time. I mean, supposedly a friend of his runs his Twitter account while Sam's in prison. So, you know, take it all with a grain of salt. But it's definitely been something he's been asking for, been angling for. We've seen him appealing to various right-wing TV hosts and trying to get a pardon on the cards. And it's not completely out of the realm of possibility, right? Like Trump did pardon another crypto founder, CZ, not that long ago. He also pardoned the founders of BitMEX, another crypto exchange, a while back. So it's not like crypto pardons are rare or unusual, but Trump did tell the New York Times earlier this year that he had no intention of pardoning Sam Bankman-Fried. So applying this way through the public sphere is, I guess, a bit more visible than what we're used to for these kinds of things. Normally, these pardon negotiations tend to kind of happen behind the scenes, but it will be a really interesting fight for Sam to watch.
Thank you for that, Bloomberg's Emily Nicole, always giving us the latest on Bitcoin. So sticking with markets, here with analysis is Delta Blockchain Fund founder Kavita Gupta. So let's start with markets. I feel like all this speculative money now has a lot of options to choose from AI to gold to oil. Talk to us about how that is affecting Bitcoin's price, because that's what we talk about in our team, that maybe they're moving capital away from crypto and into, I mean, there's a ton of IPOs.
You know,
down the line.
100%. I think you just exactly got the nail on the coffin, because it's just the market movement. I mean, I can completely understand we are comparing the worst case scenarios, FTX, but if you look at the market, $5.8 billion just in last couple of weeks have left the overall crypto market. There is a lot of money which is moving away, but that money is not going into your saving account. That money is moving away for two reasons, is what I believe in. First, this whole big AI top 3 IPOs which are coming out. And the second one is just the Iran war, and like, do we save money? Do we just put it in gold? Is the oil prices going to be big? But 92% of that money is still coming back in liquidity. Now, the question which I want to ask is, once the IPO is done, where is that cash going to go? Right? And that's what people are not talking about, because if you look at crypto, it has always been an alternative liquid asset, right? It's an alternative liquid asset. If you have to leave the country, you can take it with you. If the oil, gas pipe, if something happens with your gold content, you can take it with you, take it anywhere in the world, have it in USD, have it in euro. So where do we think that most of this liquid, for last 10 years, SpaceX has been family offices after family offices, now at the liquid stage. Once you have those multi-billion money dollar coming into the market, where is it going to go? My biggest bet, it's going to come into the cash equivalent liquid asset, which is crypto. Now, I also very quickly want to touch base a point which you were talking with your journalist right before this, Michael Saylor. You know, it's very funny. 32 Bitcoin has become the whole existential crisis for Michael Saylor, who has been, poor guy who has been working in this industry for over 10 years, has been really took Bitcoin all the way to 125K. And 32 Bitcoin has become like a fire existential crisis. And then we look at Jamie Dimon, who has been saying, on the stages of World Economic Forum, he's never going to touch Bitcoin, and now JP Morgan is definitely suggesting Bitcoin to its private wealth managers, right? So the question is, what happened to the 1,500 Bitcoins he's buying? Right. So I think the overall market perspective, I personally feel we are looking at it from a very different perspective. Give it a month to two to see where the IPO money is going, whether we come back after the summer into the crypto market. And the second thing is, if there is an alternative space, I want to know.
Right. Well, I do wonder, I mean, okay, give it a month or two. Of course, we're entering the dog days of summers here. We have to get through some big headline IPOs. But what do you think is the next catalyst, if there is a bullish catalyst to be found? Because you think about, you know, the stance of the Trump administration. You have a very friendly administration towards crypto in office right now. It feels like we've seen a lot of those regulatory milestones be met and passed. So, I mean, what does that leave in terms of what could actually reignite some enthusiasm around this space?
So first thing on the regulatory side, unfortunately, when Trump came into the power, he came with so much of promise, President Trump. But if you look at the Clarity Act, it has been stuck. And the reason the Clarity Act has been stuck, because one of the basic fundamental principle of stablecoin are yields. And the banks do not want more than your 0.0025 bips or whatever of your saving account, which basically I've never seen any money in my saving account, even after putting millions in there, to move anywhere. And then if I put that in stablecoin on Coinbase, I'm looking at 3% to 6% just building up, which is S&P, which is your treasury yields, right? So I think until and unless that particular point is not going to get cleared, and we have to have the banking lobby to really back down, because it's not a cannibalizing impact. It is something you just have to embrace. We're not going to have any push on the Clarity Act, at least from the crypto industry. Now, instead of that being a trigger to your question, I think the trigger is going to be this liquid money coming into the market, Bitcoin crossing 75K first, and then 80K is the marker which I always take for it to then zoom up. Do I see us this year or early next year, Bitcoin crossing 100K plus again? 100%. But you also have to see in parallel, we always talk about Bitcoin, Ether, Solana, but I think we are underestimating the power of the crypto native on hyperliquid. It's still sitting on $70 plus after touching $12 within last 6 months to 8 months. And the reason is because there's still so much money based on yields, which is getting generated on trades, on the yields on the financial gains. Like, there is so much happening in the space, but unfortunately, the AI bubble is so big that we are becoming a smaller part of it, but ready to be bigger again.
We have around, I think, 30 seconds here. So to Katie's point, is it geopolitical tensions, crypto IPOs, or lower interest rates that to you will be the next catalyst of Bitcoin? And what will be the clear signal that you will be looking for to show you that, okay, risk appetite is indeed back?
IPO money coming in, putting us into 75K, and then a lot of blockchain IPO from Anchorage, Kraken, FalconX, etc. coming in, taking up to 80 plus. Then nobody can stop it to go up 800K plus.
Wow.
All right, Kavita, always great to see you. Appreciate you stopping by. That is Delta Blockchain Funds, Kavita Gupta. Meanwhile, let's take a quick check on markets here because we are in sell-off mode when it comes to these broader public markets. The S&P 500, if we pull it up, has been under pressure all day, down about 1.5%. A lot of that pain coming through in big tech. The Nasdaq 100 down nearly 3%, led by the chips. The Philadelphia Semiconductor Index down 6%. We did see that rebound yesterday. It feels like a long time ago when you take a look at some of these stats. And the Russell 2000, the little guys, you had seen the small caps kind of hanging on to the green, but you can see also falling into negative territory as well. Now, coming up back in crypto land, the DTCC is launching a pilot program for a new tokenization service. We'll discuss with the DTCC's global head of digital assets, Nadine Chakar. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The Depository Trust and Clearance Corporation is launching limited trades of tokenized securities starting next month. More than 80 firms, including BlackRock, Goldman Sachs, and Circle, are part of DTCC's working group to give feedback on the service in preparation for a full rollout in October. Joining us live is Nadine Chakar, Managing Director and Global Head of DTCC Digital Assets. Thank you for joining us, Nadine. I feel like tokenization is all the rage as of these days, but talk to us why this is monumental and why DTCC rolling out this initiative is going to be a huge change for the broader markets.
Thank you so much for having me. It is indeed a watershed moment for the markets. I'll remind you, back in December of 25, we received a no-action letter from the SEC to allow us to move forward with these initiatives. So on July 15th, as you properly stated, we will have a limited number of trades. And for the first time ever in the U.S. markets, you'll have tokenized entitlements that will go live on a few blockchains that will allow clients to have choice whether they want to hold their assets in tokenized format or in traditional format or both. The ability to deposit that in the wallet of their choice, and most importantly, then to be able to use these tokens to execute on their strategic ambitions.
And I want to talk a little bit about the working group that you've assembled in the run-up to this rollout, because I believe in early May, that group was comprised of 50 numbers. Now I believe you're up to 80 members, and that includes a lot of the heavy hitters in the industry. So what are you hearing back so far? What does the feedback sound like? And what do you need to incorporate and sort of harmonize between now and July?
So just to level set, DTCC is actually owned and governed by its participant, and it's really important for us to have very wide representation across the market. So we do have our participants. We also have practitioners, fund managers, fintech companies, and so on. So the feedback so far has been very positive. The group is very engaged. And looking forward to proceeding with July 15th to ensure that what we're telling them actually works, and they can fine-tune their use cases, they can fine-tune their technology, their risk management to be ready for the full launch in October. So the feedback so far has been strong. It's been very good, and hopefully as we start to move into opening up our infrastructure for testing in a couple of weeks, we'll be able to, it'll be the proof in the pudding, if you will, as they start to come in and engage in actual form.
So Nadine, let's say that it becomes successful this year, 5 years from now. What are you looking at to know whether tokenization truly was successful? Is it assets tokenized, settlement volume, collateral mobility? What are the key metrics that you're going to be on the lookout for?
All of the above, right? So it's going to be really important to see what percentage of the assets that we hold will get tokenized. We look after 1.4 million QSIPs, about $115 trillion in custody. So we also know not everything will be tokenized. And you're seeing a lot of reports coming out with estimates, but the honest truth is nobody knows, and we won't know until October comes, and we'll hopefully start to see a ramp up. But again, tokenizing for the sake of tokenization is not the answer. It's really creating these venues and outlooks and ecosystem that would add value to these tokens. So we are working with the market at large to ensure better mobility for collateral, better access to DeFi ecosystems, and that would be the path, if you will, for adoption and most importantly, value for these tokens.
Well, let's dig into a point you made there, tokenization for the sake of tokenizing, not necessarily the ideal path forward here. Does that imply that, there's certain assets that shouldn't be tokenized? I mean, what do you see as the ideal use case and what maybe should stay within the realms of TradFi?
Absolutely. I mean, not everything is suited for tokenization, and that we will see on the first wave, if you will, a lot more demand around Treasuries to be tokenized, mainly fueled by stablecoin reserves and digital money on rails, which will be really important for us to be able to progress. Collateral is really the killer app that we're looking at, and DTCC is looking to roll out a shared blockchain infrastructure around collateral, where we're not doing collateral management, but really facilitating the tokenization of collateral across the ecosystem. We believe, based on the feedback we're getting, that will add a tremendous amount of value to our participants and markets. And then as we move forward, obviously, private markets have been wealth management. We've seen a lot of interest there, and we will continue to work with the market. But at the end of the day, we want to make sure that what we're doing adds value, and that value could be either in increased distribution capabilities, new revenue capabilities, or better capital management in balance sheet management as we move forward. So it's really important to make sure that there's a use case. These hypotheses do get flushed out as we move towards July and towards a full launch in October.
All right, Nadine, that's a good place to leave it. Really appreciate your time. That is Nadine Chakar. She is global head of DTCC Digital Assets. Now, coming up, recent price swings in Bitcoin putting pressure not only on the crypto sphere, but on digital asset treasury companies as well. We'll dig into the details next. This is Bloomberg.
I'm Norma Linda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure as investors rotate out of high-flying tech names and into more economically sensitive sectors. While the S&P 500 is lower, most of its members are actually trading higher. Also, Brent crude oil dipped below $90 a barrel, its lowest level since April 17th. That's on growing signs that global demand is plunging to counter supply losses from the Iran war. In company news, SailPoint is falling even after beating revenue estimates and raising its full-year outlook. The stock is still down more than 20% this year after a powerful rebound from its April lows. And turning to M&A, GSK is buying biotech firm Nuvalent for over $10 billion, paying a 40% premium to expand its lung cancer portfolio. The deal also helps strengthen GSK's drug pipeline ahead of the upcoming patent expirations for some of its top-selling medicines. And finally, Applied Digital is climbing after signing a 15-year lease with U.S.-based AI hyperscaler for a data center capacity, marking yet another sign of strong demand tied to the AI build-out. Those are your midday movers. I'm Norma Linda.
Welcome back to Bloomberg Crypto. Bitcoin slide adding fresh pressure to one of the most ambitious financial experiments of crypto, digital asset treasury companies. Here to report is Bloomberg's Monique Malima. Monique, great to have you with us. So we've been talking a lot already about Michael Saylor and his first sale of Bitcoin for strategy since late 2022. Talking about how that's had sort of a chilling effect on cryptocurrency, on Bitcoin prices themselves. But talk to us about what that's meant for other DATs, what signal that sent about this industry.
So it did have quite a bit of an impact on the other DATs. We saw after he made that sale that Bitcoin traded lower. So this impacted the DATs. It impacted the whole crypto space. It signaled something negative for the crypto markets because Michael Saylor had been so bullish on Bitcoin that people thought maybe he wasn't going to ever sell. But we have seen that other DATs have also sold their tokens. Even before last week when Saylor made this announcement, we had already seen that some DATs had been selling some of these tokens to pay down their debts, to meet other obligations, or just to try and get more funds as they had been seeing really low premiums. But this just signals some of the difficulty that the space has had recently. Bitcoin's down over 50% from its peak. And for DATs, because they're so leveraged, they outperform when crypto is outperforming and they underperform when Bitcoin is falling. So they've really been seeing the impacts of that throughout this year.
It does seem like, Monique, that this DAT model is most effective when the market is going up, and now it's proving less durable because the market is dipping. Talk to us about which part of the DAT universe you're seeing most stress in. I believe it's the smaller companies that are just copycats to those of the likes of Michael Saylor.
Yes, definitely. It's the smaller ones that are struggling the most because they don't have as much backing. And also, a lot of these smaller companies aren't even just holding Bitcoin. There were a lot of DATs for alternative cryptocurrencies that are much more volatile than a Bitcoin or an Ethereum. So for them, when they're seeing even larger downturns in their market, that means even larger losses for their crypto companies. And for some of these small companies that maybe aren't able to raise funds as easily as Saylor or some of the bigger DATs, they're having to turn to these token sales or looking to other options because they have debt obligations that they need to meet.
All right, Monique, really appreciate your reporting. That is Bloomberg's Monique Mulima, keeping an eye on the DATs. And it's an interesting point you raise about how some of the smaller DATs might be in trouble here. And I do wonder, Isabella, if at any point we'll start to see some consolidation. Maybe they'll just pool all their crypto together.
Why not? It might just be because the bigger players like Michael Saylor, they're the ones successful. But even Tom Lee's Bitmine, that's the biggest one that holds Ether, it's down bad, Katie. So it also really raises the question of whether this model actually even works in a down market.
Down bad, down horrendously, whatever you want to call it. Let's take a look at another asset class that's down bad, and that is equities. The S&P 500 now off 1.6%. The NASDAQ 100 crossing that 3% decline threshold here, as we were talking about. A lot of that pain coming from the chip makers, sort of the highest flying area of the equity market over the past few weeks. Certainly taking it on the chin now, Isabel.
Up next, we're talking to MoneyGram. They're launching their own stablecoin. CEO Anthony Soohoo joins us live for an exclusive TV interview. This is Bloomberg.
Now to Money Rewired, the increasing overlap between crypto and traditional finance. Global payments transfer company MoneyGram launching a dollar-pegged stablecoin that will eventually be used by its 60 million customers to send and receive money. I'm pleased to say that MoneyGram CEO Anthony Soohoo joins us now. Anthony, great to have you with us on the heels of this news. So talk to us about the why. Why is MoneyGram creating its own stable coin versus, using one of the already stable coins in circulation?
Yeah, thanks, Katie. It's great to be here. There's a lot of reasons, actually, in terms of wanting to build our own stable coin, specifically for MGUSD, the coin we launched last week. And the reason being that we see it as a foundational step towards offering future services that will allow our customers to save time, effort, and money. We believe building on crypto rails, especially around stablecoin, is going to allow us to offer just different services than we could have done in the past. And we're very excited about it.
So most stablecoins have been built for traders and institutions. You're talking families and remittances. So why do you think that the market is ready for that?
Well, I think if we do our job right, actually, the consumers will not worry as much that they are actually using stablecoin. We're going to try to abstract a lot of the complexity for them. What we want them to know is that they will have access to an asset that will be pegged to the U.S. dollar. And the reason that's important is because many of our customers around the world actually don't have access to assets where they can actually have access to a stable dollar, as well as have the ability to have additional financial services. And we're talking about billions of people around the world right now, where they're living in environments where they have high FX volatility as well as unstable currencies, and we believe this is going to be a real solution for them. And one thing I would mention is that MGUSD is the first, I would say, stablecoin that was really built for consumers. You emphasize there, because all the other stablecoins out there that have been built have really been for, I would say, traders as well as just institutions who are offering it and trying to offer it, trade among themselves.
Yeah, no, it's a fair point. And you think about, some of the pitches for stablecoins that we've heard over the year, cross-border payments, money transfers definitely falls under that umbrella. I do want to couch this conversation in the regulatory backdrop, because this announcement came in the last week or so. We're in June right now, and you think about what happened late last year, the Genius Act being signed into law. Was that a necessary step for you? How long had you been considering launching your own specific stablecoin?
Absolutely. I think the Clarity Act opened up, I would say, our thinking about what's possible and what you can't do. To work in a regulated industry like ourselves, when you have frameworks that allows us to understand what the boundaries are, it always helps. We also believe that we operate across 200 countries and 20,000 corridors. So having that level of clarity from the U.S. government was huge for us in terms of establishing the framework for us to launch MGUSD.
So MoneyGram moves billions of dollars globally. How much do you ultimately expect to run on the stablecoin network? And do you think every major payment company eventually need to launch their own stablecoin?
I wouldn't say every company would, but it certainly makes sense for MoneyGram. And the reason being, we are right now, we move billions of dollars around the world for our customers. And I think the one thing we see is that our customer relationship really is around the send and receive of those funds. What we believe we can do, though, is we launch MGUSD is we can offer other services for our customers, including the ability for them to store value in a US pegged asset. And then the other part is we also can build other services so they can use MoneyGram for their spending purposes, as well as hopefully in the future storing value within MGUSD on our network.
And let's talk a little bit about geography, because my understanding is that, MGUSD, it will be available in the U.S. first, with eventual plans to roll out globally within the year. What regions will you be targeting first after the U.S. kickoff?
Yeah, I think our ambition is to have it distributed around the world, but I think the first markets we'll be looking at will be Latin America. Those are environments where the customers can actually take advantage of what we're building with MGUSD, which is currency stabilization pegged to the US dollar, as well as the ability to avoid a lot of FX volatility as well. And we're talking about countries and people that probably have not had access to as much financial services as a lot of the things that we take for granted in our country. And so I think it's going to be a good thing for everyone.
And we have around 30 seconds left here, Anthony. Could stablecoins eventually be a bigger business than remittances, in your view, in MoneyGram?
Well, I think the way to think about it is that stablecoin will be a foundation of building our businesses in the future. And so it's just, when you think about stablecoin, it's just a foundational layer, just like you have TCP/IP for the internet or anything like that. And then what we plan to do is build services on top of these stablecoin so we can give our customers a consistent experience and allow us also to develop products that are much faster and cleaner, especially if they're running on our rails.
Okay, we got to leave it there. Thank you so much, Anthony Soohoo, CEO of MoneyGram, for the insightful conversation. Katie, let's take a quick check at the markets. We haven't checked it in around 5 minutes. I feel like
that's a lot of time in this type of
market. A lot of
market.
time, and we're seeing red on the screen. S&P down by more than 1.5%. The Nasdaq is down bad, down worse, down by 3.5%. You're also looking at Russell. Oh, it's also not having a good day, Katie. 1.5%. We thought that small caps would actually see a good day, but I guess not.
Yeah, originally it was a rotation trade that we're talking about. Now it's a sell everything trade. It's going to be interesting to see how low the stocks can go, because you remember what happened on Friday, a 10% decline for the chip makers. We're not exactly there, but we're down about 7%. So we'll keep a close eye on that. But coming up next, it's our token moment. Securitize CEO and co-founder Carlos Domingo joins us next to talk about how his company is teaming up with private asset managers for tokenized products and plans for an upcoming IPO. That conversation up next. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure as investors rotate out of high-flying tech names and into more economically sensitive sectors. While the S&P 500 is lower, most of its members are actually trading higher. Brent crude oil dipping below $90 a barrel, its lowest level since April 17th. That's on growing signs that global demand is plunging to counter supply losses from the Iran war. And meanwhile, chip makers that help power the market's recent rebound are now leading the pullback as investors step away from AI-related names. The sector is among the market's weakest groups today, with names like Micron slipping. Elsewhere, Vail Resorts is falling after cutting its full-year profit outlook, citing historically challenging weather conditions across the western United States. The forecast also came in below analysts' expectations. And finally, J.M. Smucker is jumping after reporting better than expected earnings and announcing plans to lower coffee prices next year. Higher prices for coffee and sweet baked goods helped drive sales in the latest quarter. Those are your midday movers. I'm Nora Melinda.
Welcome back to Bloomberg TV. We do want to bring you some breaking news right now on the geopolitical front. President Donald Trump posting on Truth Social that I have just been informed by our great military that last night the Iranians shot down one of our highly sophisticated Apache helicopters while patrolling over the Strait of Hormuz. There were 2 pilots involved. Both are safe and uninjured. Nevertheless, the United States must, of necessity, respond to this attack. Thank you for your attention to this matter. Again, a Truth Social post from the president just dropping in the last few minutes. You take a look at the market reaction right now. The S&P 500 pretty close to session lows. We know that we had already been under pressure today when it comes to risk assets. That's extending now. The S&P 500 down 2.2%. Not as much of a reaction when it comes to Brent. You can see that we're still near the lows of the session, clawing back some of those losses right now, trading above $92 a barrel, down about 2% still, though. We're going to continue to keep an eye on this story, Isabel, and of course, bring you any updates as we get them.
Yeah, Katie, you see it's red on your screen. NASDAQ down by 4.1%, S&P down by 2.2%. But for now, I guess it's time for a token moment where we look at the efforts to tokenize different parts of the market. So the digital asset securities platform Securitize has taken another step toward becoming a publicly traded company. The SEC has advanced the company's plan for a SPAC listing with Cantor Equity Partners. The company plans to trade on the New York Stock Exchange under the ticker SECZ. For more, we're pleased to say we're joined by Securitize CEO and co-founder Carlos Domingo live with us on set. Thank you for joining us. So congratulations on that key milestone with the SEC. Why go public now, and what are you going to do with the funds?
Well, I think the tokenization is probably the biggest narrative in the market after stablecoins. So I think that after running the company for over 8 years, and the last 2 years making a tremendous amount of progress in terms of growth ourselves and the industry, I think that the reception of public markets towards a pure play tokenization company like ours is going to be pretty good.
And let's talk about the second part of Isabel's question, which is what are you going to do with the proceeds, coming to the public markets? How does that fit into your vision about where you want to grow this company and what's next?
So we're not, need a lot of cash to operate. We're not one of those companies that loses a ton of money, which is a good thing. I think for shareholders, so going public and raising the money is not about funding the operations, but it's about expanding on different services to be able to help with on-chain liquidity. And more importantly, I think that the crypto industry needs to consolidate. And I think being publicly traded with public equity as well as cash put us in a very good position to be able to consolidate the industry with acquisitions.
Give us a sense of scale. How big could a tokenized assets realistically become in the next 5 years? I feel like last year to this year, it grew around 300% or something like that. What would it look like in the next 5 years?
Well, in the last 3 years, we went from like nearly zero to over $30 billion, right? So it's a tremendous amount of growth. It's the fastest growing part of the industry. I think Citibank recently put out
a 2030 goal.
Yeah, 2030 goal of $5 trillion. I think this is very ambitious, but at the same time, if you think about the magnitude of the assets that we're tokenizing, just equities and ETFs is already a $140 trillion market, then I think the $5 trillion is a pretty good goal to have in mind.
And I do want to talk about where we are in the tokenization narrative, because as we've been discussing, there's a lot of interest in this space, a lot of momentum, it seems like. But still, you talk to a lot of the folks on traditional Wall Street, and it's not necessarily part of the broader conversation yet, the everyday conversation. So, I mean, what signs are you seeing that, it's becoming more ubiquitous, or at least, becoming more socialized, and what's still left to do here?
I think you're absolutely right. Within the crypto community, and they have people working on digital assets on the banks and the asset managers, everybody talks about tokenization. But now that, when I talk to other people in other parts of the financial markets, they've heard the term, but they don't really know what it is. I think us going public is also part of bringing tokenization to more of the mainstream media, so people start understanding that this is basically the biggest revolution happening in capital markets, probably since electronic trading happened. And I think that, bringing more assets on chains and also figuring out how we can get people to consume them is the best way for, exposing them to the benefits of tokenization.
In this show, we always talk about tokenization, how you can tokenize nearly everything, but there must be an asset class that maybe not be the most well-suited in an on-chain wrapper. What would that be, in your view, if there is one?
I think that the illiquid assets, historically, they were like the ones that people thought that were more suitable for tokenization, and I think people realized that starting with liquid assets first, like the dollar actually arguably is the biggest tokenized asset with stable coins, and next things like treasuries or equities, etc., is a better place to start, because you take a liquid asset and you put it on blockchain rails, and then you make it even more liquid, you make it 24/7 tradable, you make it easier to transact and move, etc.
And do you think that the future runs on one blockchain, or is it becoming clear that there will be multiple and that it really won't be as fragmented as what people say?
I think at this point in time, we need to assume that we're going to have a multi-chain environment because there's already too many large blockchains like Ethereum, Solana, but there is other ones coming, like Circle is releasing Arc and Stripe is releasing Tempo, etc., that I think are here to stay. So we are, as a company, are working in a multi-chain environment.
All right, Carlos, great to get some time with you, and congratulations again. Jeez Louise. That is Carlos Domingo. He is the CEO and co-founder of Securitize. Meanwhile, let's go back quickly to what we're seeing in the broader markets right now, because we did bring you that breaking news a few minutes ago, that post on Truth Social from the president, Donald Trump, saying that the U.S. must respond to Iran's latest attack on a U.S. helicopter. You can see that sent the S&P 500 two-session lows bouncing back a little bit right now. But then you take a look at the NASDAQ 100. What we're seeing there, declining down about 3.8% at the moment. The small caps also getting hit. Crude actually extending losses here, which is interesting. Not exactly the knee-jerk that you might expect, but still, Brent down nearly 3% on the day, Isabel.
It's really interesting. A group of chip makers, I feel like we didn't talk about that, but they're also really in the red, I think, from what I'm looking at, due to intense volatility. They erased a rally, plunging, I think, 8% if I'm looking at this correctly. But the market definitely isn't liking what we're seeing, Katie. Well, up next, as we count down to the days to the World Cup, Kraken today announcing a new partnership with FIFA. Kraken co-CEO Arjun Sethi is coming up. This is Bloomberg. The FIFA World Cup starts this week, and today Kraken announced a new partnership with FIFA. Our own Tim Stanovec asked co-CEO Arjun Sethi about that and about the potential for Kraken to go public. Take a listen.
One of the things that we've done at Payward and Kraken as a whole has been, how do we align ourselves with what I would call permissionless brands or permissionless sports or permissionless activities worldwide. Right, so someone who's in Argentina or someone who's in Southeast Asia or a lot of our constituents who are in Europe, they love all types of sports. And so FIFA specifically to us represents that delivery, where you have a permissionless way to be able to watch, you have a permissionless way to be able to participate. And so we wanted to be able to partner with a partner that believes in that same philosophy. Now, what is that philosophy? Well, for us, it's open rails, it's open access, it's financial global system that we want to be able to have everyone participate, regardless of what that asset may look like. And so when you think about programmable money, programmable assets, that's what we want to be able to stand behind. And for us, choosing FIFA didn't happen overnight. A lot of what we wanted to be able to explain was, this is what we believe in. This is what we started believing in when the first Bitcoin white paper came out. And then we asked them, rather than them asking for us, like, how do you adhere to our values of what we want to be able to build? And so I'm really excited that they're on the same page of what 24/7 instant settlement global access looks like. And that's why we wanted to plant our flag with them.
Well, speaking of what you've been building, got to ask, as I do whenever we speak, Arjun, about the status of your own IPO plans. Our Bloomberg News team reported last month, when you announced layoffs, that the IPO may not happen until the end of this year, perhaps even early 2027. Has the time frame changed for an IPO for you?
Yeah, so just to be clear, one of the things that we do at Kraken, and then Payward, our parent brand, has been focused on performance. How does the company perform, and how do we make it better over time? And that's something that we started more rigorously. Two, is how do you build a durable business in order to do that? And so what are your sources of revenue? And then how do you bifurcate it across not just trading, but banking and financial services? And we've done that. And then last year, we announced that we had confidentially filed. And so that's the way in which you should think about what we're doing at Payward and what we're building out. So there's banking, and then there is trading in terms of the assets that we have underway.
How does this sell off, like external factors, how does that play into the timeline?
We're just focused on building our company for the long haul. So in terms of timing, it's not something that I could speak to today.
As far as layoffs go, are you done with those for now?
Well, the only layoff that we ever did in the company was when I came in roughly about 2 years ago. And it was in a way in which we thought about how do we want to think about setting ourselves up foundationally as performance first. But since then, on average, we have focused on performance cuts. We've also added more folks. Where from the moment I came on, I think we're roughly about 2,400. Today, we're about 3,100. So net gains has been continuing to be higher. I think what's really more important is like what type of company you want to be, however you fit, and what's the culture that you're building. And we're very focused on performance as we continue to grow.
Well, how connected, or maybe a good word would be leveraged. Like, how leveraged are you to external crypto prices, like the price of Bitcoin? How much does that matter to the health of your business?
That's a great question. So when we started, that's all we had. So we were 100% leveraged to Bitcoin. But then over time, you had Ethereum, and then you had alternate coins on top of that. And then we had meme coins. Now you could make the argument that that was all correlated crypto assets. Then over time, a lot of our customers deposited fiat, and then they deposited USDT, USDC, other Euro stablecoins, and that's continued to proliferate. That's a pretty large and significant source of our deposits worldwide. And as I mentioned, we do trading and we do banking and financial services at the same time. And so when you add all these pieces, and then recently, tokenized assets are becoming a larger and larger portion of our assets. So you add the bifurcation of what we've built. You're able to do between trading and banking. Within trading itself, we do spot margin, futures, and derivatives. But a lot more of what we've done has been TradFi, right? So we've listed all the equities, we've listed all the commodities. We're one of CME's largest partners, retail partners in the United States, and that's global. And so globally, we're about 60% of our revenue comes outside the United States. And then so you can think about it from a micro and macro market. And in our last financials, even though we're a private company that we released about for the last quarter, we grew when the market was down. So I think over time, you'll see that we'll be less cyclical with the crypto markets, and we'll be cyclical with the macro markets.
And that was Kraken co-CEO Arjun Sethi speaking to Bloomberg's Tim Stenovic, who usually is here, but you got Isabel and I this week. But let's go back to these markets. Of course, we're keeping a track of this sell-off. The S&P 500 down about 2% right now. And it's the NASDAQ 100 that's really leading losses. The tech names, the chip names, some of your biggest decliners on the day. That index down by nearly 4%. Of course, monitoring what's going on in geopolitics. The sell-off started before it, but we did hear from the president that the U.S. must respond to Iran shooting down a U.S. helicopter. But that does it for Bloomberg Crypto. Join us again next week. This is Bloomberg.